Greetings, members one and all of the Salivation Nation. Could this be the reason why silver is not performing as well as gold? Let's explore. For many of us in this community, and who accumulate silver as a way to protect ourselves against economic instability, we've been discouraged over the last 5 or so years, especially when we've seen an ever increasing silver to gold ratio. In fact, as of the recording of this video, we can see here that we've seen a bit of a bump in gold and silver prices, and what usually happens is silver climbs and outperforms gold in terms of its performance, on the way up. And then it also underperforms gold greatly on its way down. But right now, it is in a sort of a little bullish move upwards, and that has pushed the gold to silver ratio down to 76.28. But, of course, that is still a very high gold to silver ratio compared to what many of us think would be normal, which in this day and age is harder to describe what normal would be. But most of us think that number is somewhere between maybe 55 to 65. And that's a pretty big range, which means that we're open to some sort of normalcy between the gold to silver ratio. Gold, as you can see on this chart, has reached numbers that have broken its previous record in 2011 of $1,921, I believe. And it has been above that number for now weeks and a couple of months now, actually. And it has well broken that record when it went up over $2,000. But shouldn't silver be breaking its record too? So what is going on here? We have silver price manipulation claims, and I believe there is some of that happening on the micro level. And then there's also market silver price suppression, which I do believe there is some of that going on here too. And this is an old article I found that talks about these two things. I'm going to give you a real world example of how maybe suppression may be occurring, and how market manipulation is not necessarily price suppression. And this is an older article, and it talks about it in relation to gold, but really you could use it for silver too. In fact, some people feel that silver is even more manipulated. My thoughts on that, but to summarize, I believe there is a manipulation on a micro scale, and we've seen that with arrest and investigations for J.P. Morgan. And by micro scale, I'm talking about not necessarily those widespread manipulation of prices, but in terms of temporally. In other words, they make these spoof trades and manipulate the markets by making these false buys and then pulling back in order to profit. And they profit when the prices go up or down. For a very short amount of time with high frequency trading. But let's talk a little bit about this on a more global or a wider scale here in this article. And I'll read this first paragraph because you know exactly where this author is coming from. They believe that that this claims by manipulation-focused gold market commentators is that evidence of market manipulation constitutes evidence of long-term price suppression. And he goes on to dispel that as he goes on through here and says that sometimes the manipulation is unethical or illegal, but a lot of the price manipulation attempted by private operators in the financial markets is neither illegal nor unethical. A lot of the time it's a legitimate business practice. From the perspective of manipulation-focused pontificators about gold, the big story over the past 2 years was the evidence that major banks have been scalping profits by manipulating the London gold fix. Deutsche Bank even settled lawsuits over allegations it manipulated gold and silver prices via the London fix, thus providing plenty of grist for the conspiracy mill. Assuming the banks were indeed using the twice daily London fix to manipulate gold prices, then in this case the manipulation was probably illegal and most certainly unethical. If nothing else, it provided a breach of trust. And noting an earlier post about this, the price manipulation has potentially occurred via the London fix, could only have affected prices by small amounts for very brief periods. And that has been my argument for the longest time. And they can go one way to the upside and the downside. The small effects would work both ways. So people can be hurt depending on if they sell during those periods of times. That is something I think this community doesn't get. They think it's all just one big suppression of prices. But I'm going to give you an example of how even price suppression, what I think could be, is something that is normal. And for reasons that we'll see here momentarily. The news that banks use the London gold fix to legitimately increase their profits is therefore completely irrelevant to the claim that there has been a successful price suppression scheme in operation in the gold market over a great many years. And yet it has been portrayed as if that were the veritable smoking gun evidence of such a scheme. If the gold, and by nature the silver market, had really been subject to price suppression over a long period, then gold's performance would be totally out of whack with related financial markets. And I think that is probably the strongest argument against people who think there is widespread price suppression. However, this is not the case. For example, the following chart shows the close relationship over the past 3 years between gold prices and the bond-dollar ratio, the T-bond price divided by the dollar index. And there you can see how they mostly line up. But obviously we've had some periods of time where they have separated, and maybe that's where the arguments for suppression or, well, look, it's to the upside here, downside there. So you don't know. But again, this period of activity, if there's any kind of shenanigans going on, this is around that time period towards the end of when JP Morgan, where the investigation ended around this time period. So again, this is a short enough time span that it could have been going on for a couple of months. This is a couple of months period here where this has occurred, that could be some evidence of it. I don't know. But sometimes these things just happen for various other reasons within the natural market. That brings me to this story, which came out on November the 5th from Kitco News. Now, the mining sector is quite interesting. It's very complex. There's a lot that goes on in the mining sector, but this could be an example of natural market price suppression. And suppression, the definition of the term essentially means to arrest or stop. It's not necessarily a bad word, although it does sound bad because you're suppressing and whatever. It sounds maniacal, or it sounds sort of mischievous, let's say. But First Majestic Silver announced record revenue in the third quarter as silver prices rallied to a 7-year high. In its earnings report released Thursday, the silver producer said that revenue generated between July and September rose to $125.9 million, representing a 30% increase compared to the third quarter of 2019. That's amazing, especially considering where silver prices had been for so long. The company's plan to stockpile silver because of low prices appears to have paid off. There you go. The company has sold its $25 million worth of stockpiled metal inventory held over from the prior quarter. We generated record quarterly revenues, cash flows, and earnings as a result of higher metals prices, improved production rates, good cost control management, and the decision to delay the sale of inventory from the prior quarter. Along with our record cash and working capital position, the company is poised to close out 2020 as one of the strongest years in the company's 18-year history, said Keith Neumeyer, president and CEO of First Majestic, in a statement. The company reported adjusted earnings for the quarter was $25.7 million, or 12 cents per share, up compared to 11.9 million, or 6 cents per share, reported in the third quarter of 2019. And substantial earnings come as the company reported a 22% drop in production compared to last year. First Majestic said that it produced 5.2 million silver equivalent ounces in the third quarter, down from 6.6 million silver equivalent ounces produced during the same quarter of 2019. Although production was down, so were costs. First Majestic said that all-in sustaining costs dropped 8% to $9.94 per payable silver ounce. Now, again, I am fascinated by how these mining companies can survive, and I believe this was a genius move by Keith Neumeyer, President and CEO of First Majestic. He was smart to hold on to that silver and then to sell this $25 million worth of silver stockpiled metal inventory held over the prior quarter. Now, what does this do? That's a lot of silver to put into the market. Keep in mind, $25 million may not sound like a lot in the grand scheme of things, but it really is in terms of the number of ounces that are being put back into the market. And to me, you put more silver into the market, it's going to dilute the supply, kind of like when you print more money, it's going to somewhat devalue temporarily, or devalue the dollar. But silver is a finite resource for sure. But when you have more supply of something, well, in turn, that's going to suppress the price. And when I say suppress the price, I'm not saying it's going to like completely crash the markets, making that, but sooner or later, it's going to prevent the price from increasing and keep it either where it is at or down a little bit. And we have seen silver fall back from almost 29, almost $30 an ounce. Now here it is resting at just above 25.50 an ounce. But that is only the last few days because of the fear and what's going on with the elections, the uncertainty there. That's why we're seeing the prices up for both metals. And but nonetheless, that's something to certainly take into account here, because like it or not, folks, there is a lot of silver out there. And I think people forget about that. It is a precious metal. It is a lot less silver than there is copper for sure out there. And there's a lot of demand for it as well for multiple uses, mainly as an industrial commodity, and in the fields of technology and medical science. So what does that tell us? It means that that there's more silver out there, so the prices are going to be low. You can't really do that as much with gold. There may be some examples and ways to do that, but look at the per ounce, all in the $9.94 per payable silver ounce. Now, that's all in sustaining cost, dropped 8% down. So they were able to profit from that. And I think part of that has to do with the big fall in March and working their way up, so that they couldn't produce as much. But what they did produce, they were able to profit at least, well, maybe even 8%. But so you look at that, the cost to produce an ounce of silver out of the ground, and you probably is a little bit higher than that right now, but a lot of that is because of fuel costs, time, energy, and silver. This is obviously First Majestic, I think, as a primary silver mine. They also do gold mining as well. So, but when you take that into account, to get actual silver out of the ground is probably higher than that now, is my guess, considering where silver is right now, but maybe not. But let's say $10 an ounce. That means silver's never going to go below $10 an ounce, which is kind of a ridiculous notion to even think about. But it did get to $12 in the paper markets for a brief amount of time. Where are we going to go from here on out? We shall see with silver and with gold. But be patient, folks, and keep in mind, this is an example one could make for price suppression in the natural market forces, as a natural market force. and there's nothing wrong with it. This has happened before. Like I said, First Majestic was brilliant with this strategy, and more than likely this has happened before, and especially with silver, with the time and energy that they put in, if they can afford to hold their inventory until it becomes profitable for them to release it into the markets, that's what they're going to do. Now, silver is a byproduct of other metals out there. That's where the vast majority of production of silver is. I don't know how that works. That's a very interesting part, and that's part of mining that is fascinating. We'll see how that is. A lot of questions, but I think this is an example of natural market price suppression in action to an extent, and we'll see how this plays out. In the moral of the story is that we should continue to press on with our accumulation strategies, but keep in mind and understanding that that gold to silver ratio may continue to be out of whack. Well, right now, it does seem like the mid 70s is about normal these days. But accumulate with realistic expectations. That's the message of this video. Accumulate with realistic expectations for silver and for gold and for whatever you do. And your strategies to protect your wealth, because that's what this is about. It's about protecting your wealth over the long term, which requires patience. So I hope you found this video useful, fascinating indeed. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.